Let's also now welcome in Peter McGuire, who is joining us from Australia. And Peter, great to have you on a day like today. It's the Saudi action really taken everyone by surprise. I mean, we all knew that there was a chance of Russia possibly not agreeing, but this extent, we're possibly looking at the worst demand also since the global financial crisis. Is this an end now to this sort of famous alliance, so to speak, for good?
Well, good morning. I mean, a couple of things. First off, I wouldn't be surprised if it's certainly going to put the shekels amongst a number of those key players, and it'd be interesting to see what Russia does over the next 24 to 48 hours, where the alliance and it plays favourably in some ways to President Trump. So there's the first part of it. We understand that it's an economic crisis and we've got certainly a health crisis. So you wrap those both together, and then you've got the uncertainty with the Saudis and what they did on Friday as far as those treasons issues with family members and all of those concerns. So it's a very, very dramatic day, as we can see, as far as crude sell-off. And I think there's probably further to go over the next matter of hours before New York opens today.
We've seen, what's the geopolitical dynamic now looking like, Peter? I mean, is it completely unknown at the moment? How is this going to impact some of the major players?
Well, it's uncertainty. We're understanding that. You've got, as far as US dollar sell-off, you've got gold just on that $1,700 mark. So that's the fear sector. You've got the 10-year, being crunched. You've got the Dow down 1,200 odd points. And we're still about 8 hours before it opens, or 7 hours. So it'll be fascinating what happens by the time UK opens and we move into the Saudi and Euros time zone. Now, the uncertainty is how long does this last for? I mean, there are very few times in your life do you see a market down 30-odd% in a matter of hours. And we've seen that today on crude. So these aren't normal events. You might see them a couple of times in your lifetime. The last one I remember was the Desert Storm, I think in about 90 or 91. So they're not normal occurrences. And the fear going into the market naturally is that, anyone on the wrong side of the market can get whacked out as far as margin, and certainly your stops need to be well locked in from a trading perspective. But the opportunities naturally do attract a lot of retail traders because those huge price swings. So that's really going to be a key driver, I think, for many of these traders all around the world to really take advantage of these, monstrous moves.
Right. Peter, when you see such a fall, what does it indicate? Does it indicate that a recession is coming in? What does asset prices, the way they fall this way, indicate?
Well, we're all understanding as far as, recessionary fears. We've had earnings reasonably good in the States, although a bit choppy naturally. But, there was talk that, it was onward and upward. It was to a lot of contrarians or bears in the market. They certainly think that it was overbought. And this market is now demonstrating that you could see a washout, Dow from the end of last year. I haven't got a graph in front of me, but it's probably got to be approaching with tonight's washout, probably 16, 17, 18%. So it's been a dramatic hemorrhage. And where is the bottom of the market? So you need buyers, and there's probably many out there that will ratchet up and re-enter the market, but a lot of people would be licking their wounds. They may have margin calls, the hedge funds. We saw what happened to gold the other day. So it's just uncertainty, and that really creates fear, and people look for the best opportunity, and that may be quite simply the gold market at the present.
We've spoken for so many years. I've never seen this, the kind of resigned expression that you have this morning, which just tells...
Not too much resigned. I'm not resigned.
Shocked.
I am shocked. I mean, look, we've been talking for years together, and these are uncertain. These are times I haven't seen. I mean, I've got 4 screens on my desk. I'm looking at TVs. I'm watching stuff. This isn't normal. You've got a market down 32% for crude. I was supposed to be in Vienna last Thursday and Friday. OPEC came out this time last week and said, don't come over. Media's not wanted. You can't get in the building because of coronavirus. So I didn't jump on a plane, and I thought, oh, well, they'll structure a deal. They'll, strap a deal together as far as Russia. There's uncertainty as far as what's going on with the Saudis, but it'll sort itself out. Well, have a look what we are today. That was at $50 for crude. I'll even go that far as WTI, maybe 48 or 49. Now we're at 28. So it's just been crunched, and no, it's not a normal Monday.
And here in India, we're actually heading in for a holiday tomorrow, which is making everyone even more nervous for once, yes, because we don't know what to expect on Wednesday. But do you think this is going to be an all-out war now for market share? Because Saudis are cutting prices, amping production. Russia's definitely going to have, something that it comes back with. Are we looking at a supply glut situation at a time when there's limited demand, particularly on the back of this whole coronavirus scare?
Well, exactly. From a demand destruction perspective, there's certainly structural weakness. But the other side is it a race to the bottom? They're just saying, well, hang on a second, let's just get serious on this. And the Saudis have got very deep pockets, as we know, and I suppose their price of production. Does anyone really know what they can pull it out of the ground for? We understand what it was like in the IPO and as far as Saudi Aramco, but their reserves are monstrous. We understand the fragility and the nervousness of the crude market, and that's being played out today. So it was 25 a handle that we're going to look at over the next couple of days. Any betting man or any trader would have to say there's a big chance you're going to see, Brent under 30, WTI the 26, 27 level. And when it bounces, it's going to bounce hard. But there are so many fear factors driving into the market, the nervousness across the Italy, the Irans and Japan as far as coronavirus. Let's see where it happens over the next matter of days. I think this is a day-by-day proposition. It's exciting, but it's also a wonderful time for consumers, but not a great time to be a producer.
Peter, just a word as far as, the fall today is concerned. Of course, it's happening because of what you're seeing in terms of production, what is happening versus different producers and how they are, differentiated on their opinions. But do you think because of coronavirus, the crude was already in a bear market, it was already factoring in a recession, and now with this news coming in, it's just impacting the sentiment in crude and various other markets?
Well, yeah, crude's been it's a true barometer. I mean, we look at the price of copper and you take into the account, Dr. Copper. But really, if you want a global perspective, there's nothing better to look at, I think, than the crude market, because it really is. It's got emotion driven into it. It's got weather outages. It's got hurricanes. It's got geopolitical. It's got, now we look at the health issues. All of these factors in plan, and you've got the demand destruction consideration. So all of that rolled into one give us an indication of the true essence of a market. And I think you've got the capacity from some of those big producers to get together now and to say, right, we're going to get a floor in this, and this is where we're going onward and upward. Or the uncertainty, if Russia doesn't come to the play very quickly, I think that's going to cause, again, further volatility and price swings. The whipsawing is going to be enormous. And that's just the nature of the market.
All right, Peter, we'll leave it there. And let's see if you're smiling the next time we speak, because no one knows how this entire situation is going to go. And we'll hopefully talk to you again midweek.